Welcome to the Investor Financing Podcast, where we interview real estate investors and lenders so you can learn all the secrets to getting your projects funded and scale your portfolio. Learn about fix and flip loans, BRRRR financing, rental, fix to rent, commercial, multifamily bridge loans, business loans, and so much more. And now, your host, Beau Eckstein.
Can you kind of just give like a high-level overview of your background, how you got started, and where you are today, essentially, and then we could dive in with questions after that?
Sure. My background, I had a corporate job up until the crash of '08. I actually worked in New York. I worked for a bunch of different Wall Street banks, which sounds really impressive, but I was just a guy doing a lot of 100-hour weeks for very little glory at that point. But my background is in bond trading, financial analysis. 2008 came. I was working for Bear Stearns. Bear Stearns went under. JP Morgan took over Bear Stearns and laid me off. And it was, in hindsight, the best thing that could have happened to me, because at that point I was kind of done with corporate life. I was done with working for other people. I didn't submit a single resume at that point. I knew I wanted to be in real estate. I owned a couple of rentals already passively with a buddy of mine back in my hometown. So I had the real estate bug already. I just wasn't sure how to get into it full time. And at that point, I saw being laid off as just kind of finding a kick in the butt I needed to go and take a stab at it full time, basically. So I got into real estate investing full time in 2009. Did some wholesale deals, but I very quickly jumped into essentially BRRRR, right? I mean, starting 2009, I was doing BRRRR deals. I would buy a house at a time, renovate it, lease it, refi out, go buy another house. And I started doing a house at a time, mostly gut renovations. Like I've almost never done a cosmetic renovation in my life. I almost immediately jumped into doing some pretty crazy gut renovations, because the area where I invest, it's mostly 100-plus-year-old housing stock. So anything that you're buying at a deep discount likely hasn't been updated in not like 5 or 10 years, but 50, 60 years. So almost trial by fire. The first rehab I ever did, a buddy of mine went in and gutted it out and started over. And it was a great learning experience. I mean, you learn. People come all the time to me and say, how do I figure out how to estimate repairs? I'm like, go gut a house. It'll be 6 months of hell, but after that, you'll know everything. Right? So that's how I learned. So I started out doing BRRRR deals, and then a couple of years into it, I got to the point where I had a little bit of passive cash coming in, and I started buying lots. At that point, new construction still didn't make sense, but I started buying infill lots here and there next to a house that I was renovating, maybe in the same neighborhood. And then I gradually transitioned my business into doing new construction. So mostly what I'm doing now is I'm building ground up rentals. We built some houses to sell, but that's not really a big part of our business. Most of my focus is in doing ground up development for the rental portfolio. So right now, and we're not talking huge projects, because I don't go out and raise money, right? I do nothing wrong with syndication, nothing wrong with raising money. I choose to just do it with my own money. Occasionally, I'll have a partner. So, like right now, I'm building a 14-unit mixed-use project, 13 apartments, 1 commercial space. I'm building 11 duplexes, breaking ground in hopefully a couple of weeks on a 25-unit mixed-use project that's going to have about 5,000. I'm the only crazy person right now building commercial space, literally. I'm getting ready to build a restaurant space and offices, and 21 apartments on top of it. So that's kind of my sweet spot, right? And anything between 2 to like 50 units at a time is what I like to build, and just goes into my rental portfolio. And I've got stuff in the pipeline that's bigger, but working on those plans right now and getting it through the city, et cetera, et cetera. But that's where most of my focus is. And occasionally we'll build, every year I probably build 6 to 8 houses that we sell, but it's almost just a matter of, it's not a primary focus. Most of my stuff is, I want passive income. I want cash flow. And the new construction part of it is nice, because it takes some money. It takes a lot of time and patience, but we end up having a really high quality, low maintenance, super easy to lease asset, attracts great quality tenants, and it stays rented. So the trade off to buying things that are already stabilized, there's something that needs a little bit of work, is I get to design the project from scratch. I'm very hands on with layouts, finishes, amenities, and it's assets that you know I can keep in my portfolio for decades, and they'll continue performing if that makes sense.
So you really cleaned up kind of like when there was the downturn, you were like the one that was buying lots when everybody was like just heavily discounting because everybody was going after everything else. So
Yeah,
were you getting these lots just so cheap that it's
they're cheap. I mean, I wish I had the foresight and the cash to buy more, because it's funny, the appreciation on lots. If you go back to like 2010, and in my market, houses probably doubled in value, maybe more, right? Since the foreclosure crisis, lots are up 5 to 6 fold. So the appreciation in I'm trying to do like a graph with my hands. It's not really working very well, but the appreciation in land. I mean, if you were to put all your money in land back in 2010, nobody was paying attention to it, and that was primarily because at that point in time you could pick up houses below replacement cost. So it didn't even make sense to buy land at that time unless you had patient money and you were building your pipeline for the future, right? Because at that point you could pick up a house way below replacement cost. And if you can buy physical assets below replacement cost, almost for the value of the land, then you do that all day long. But at some point in like 2012, 2013, so many people were chasing foreclosures and rehab projects that arbitrage wasn't there anymore. And more people started buying lots. Lots started going up in value significantly. So I mean, I picked up lots for 10 grand that I now trade for 60 or 70 or even 80.
Strong.
Yeah, I wish I bought more. I mean, I wish I bought everything in sight, and I just,
yeah, no, that's and so if somebody's getting started, let's say they have experience rehabbing and owning some rentals and they're looking for like an infill lot, kind of what how do you identify a good kind of lot to build a duplex or triplex? I mean, obviously zoning, but do you have like kind of a
Mhm.
formula you use for that to kind of find those opportunities?
Well, I mean, at this point in my market, I know the zoning well, and I know what a typical lot size needs to be in order for me to put a duplex on it, or a 4 unit. So it starts by knowing your zoning code, and then the second part of it is knowing what options you have in terms of rezoning or getting variances or getting, especially in my market, we call it special use permits, when I have a piece of land on which I can by right do something, but I want to do something else. We don't actually rezone it. We just get a special permission to build something else on top of it. So start by learning zoning code. And then second part to that is understand what you can build by right, given a certain zoning, and then figure out how you can rezone, because you can instantly improve the value of the land just by rezoning it or getting special exemptions. You can instantly double the value of your land if you can increase the density that you can put on it. So, in my market at this point, like I know what the zoning type I need and how big that lot needs to be in order for me to be able to put 2 units or 4 units or 6 units on it.
And now for your duplexes, you've done so many now that it's kind of you use almost the same plans and it's like almost a cookie cutter process.
Yeah, I have two layouts that we do, and it's literally the same plan. So right now I'm building I think 11 duplexes, and it's the same plans. I've got one piece of land where I'm building four next to each other, and then the rest are scattered, but we're using the same exact. I'm building the same duplex, same finishes. When we go to market these duplexes, when we go to lease them, I will bring people in there when we're still putting drywall up. Like I will, we start pre-leasing really early. Sometimes we'll just have insulation in the walls, but I can show people pictures of the exact finishes that this product will have, because we've already built it a number of times. And so we'll sign leases with people before drywall is done, right? 3-4 months before we finish the project, because we have sort of a cookie cutter model now that we use.
It's very good. Can you kind of walk us back? Like, so you got into real estate and you started getting some success. And then how did you, start like this software company for Rehab Valuator? I mean, was it out of a need? And then you said, well, I can actually help other investors use it. Can you walk us through like how that all started and now where it is today?
Yeah.
And like the future? Yeah.
But I mean, so I started the software business around the same time back in like 2009 that I started a real estate business. And it originated like as a spreadsheet that I used to figure out deals for myself. And then right as I got laid off from my job, I read the 4-Hour Workweek. And Tim Ferriss kept talking about how easy it is to start an online business and, multiple income streams. And at that point, I was unemployed. I was starting my real estate business. I didn't really know whether the real estate business was going to work out. So I said, maybe let me start an internet business. What am I good at? What can I actually contribute to the world? I think that's a good question to ask yourself, is like, if you're starting out, what can I do of value that can help other people? And at that point I had a spreadsheet. Like, it was a really simple spreadsheet, but I shared it with a couple of other investors, and they said, man, this is pretty cool. Here's some suggestions for tweaking it, but you should sell it. And I said, I don't know the first thing about selling anything online, creating a software company, building websites. And, I launched that business in 2009, not knowing anything. And just through a lot of trial and error and constantly improving our product, we grew the business. But, it started off being almost like a hedge. Hey, let me add an additional income stream in case real estate doesn't work out. But luckily, real estate worked out, software business worked out, and now it's kind of cool because they work hand in hand, right? I mean, I use the software myself in my business. I tweak the software based on the needs that I see really in my own business as well. And so, like, I'm my own client.
Can you, for people that don't know about Rehab Valuator, I'm going to put a link in. I think we have a free disc, or the free version where they could try it out, and I'll put it on the screen here. You can go to thriverei.com and then Rehab Lite right there, and then you got your wholesaling course too. But will you just kind of walk them through what they could do with it and how you use it in your business?
Sure. The software really does 3 things. It does deal analysis. So if you are a wholesaler, you can evaluate deals, you can pull up comparable sales and figure out after fair value. You can calculate offers, you can evaluate flip exit strategy, buy and hold, you can evaluate bird deals, you can evaluate just straight up buy and hold deals. If you are a wholesaler, there's a marketing component to it where you can market your wholesale deals, you can create presentations for it and market your wholesale deals. You can build your cash buyers list with that marketing function as well. We use it, and a lot of our clients use it to create funding presentations for private lenders as well as for banks. You can create funding presentations if you're rehab and flipping. You can create a private lender presentation that's been incredibly effective for a lot of our clients. We use it to raise money from banks. I use it to put together development presentations for my lenders. I just have crazy allergies lately. Yeah.
Me too.
Something is stuck. But yeah, so we use it for funding presentations. And then there's a whole project management component to it, which I really just built out for myself. You can create really detailed rehab budgets, construction budgets, scope of worksheets. You can create cost templates for yourself so that if you're looking at another deal, you press a button and all your costs are right there. So it's a big time saver. There's an in-app accounting function that lets you keep track of your costs on an ongoing basis, compare your budget to your actuals. We're now rolling out a scheduling function for your project. So if you're doing a rehab or new construction projects, there's going to be a Gantt chart where you can schedule every step of your project. So, it does those things. It doesn't do everything, right? It's not a CRM. It doesn't go out and find leads for you. We leave that to the professionals, right? So we choose kind of a few things that we do really well and leave everything else out.
Yeah.
If that makes sense.
I love that, because that was one of my questions, is that I was going to ask about tools and how you manage your projects, because you got how many projects at any given time do you have going right now? Or just in general throughout the year, what's kind of your flow? 5 to 8 deals?
I mean, right now I have about 8 going on. That's not including what's in planning and design phase, right? So active projects, probably about 8. So it's not, it's not a huge amount. But
for
yeah.
our audience, it probably is. And so that was my question, is when you talk about Gantt charts, like explain, because I'm familiar with Gantt charts, and that was one of the things I wrote down, is like, are you using Gantt charts? Explain for our listeners, because I don't think I think some people do.
Yeah.
Most people don't understand how a Gantt chart, what a simple tool in itself. I used to have to create mine off of a spreadsheet, and it bugged me, because I hate slowing down. I'm more of a driver. I just want to go. But it's like, explain how you're using the Gantt chart, why it's important, and maybe how you lay that out for a construction project. I think that'd be helpful for a lot of our viewers.
Sure. Well, I mean, a Gantt chart basically lays out tasks in a sequential order, right? And so if you have a project that has, demo, digging footers, or site work, digging footers, building foundations, framing, you lay out those tasks, and you can create dependencies that says, framing can't start until your foundation is built. Framing is going to take, foundation is going to take 5 days. Then framing will take 7 days, and it's just a way for you to schedule your tasks and have a plan for how long your project will take. And oftentimes we end up having conversations with our subcontractors and suppliers where we say, okay, electrician, you and I have a deal. We'll need you in like a month. I'll let you know. I'll call you, and you can get away with that stuff, but it's much better when you can tell them, well, according to the schedule now, I'm going to need you roughly on this date. And if something slows down, you can adjust your Gantt chart. You now know, okay, electrician doesn't start till 3 days after that. It allows for better communication with subcontractors, with suppliers, because now you have better targets for when you need materials delivered on site, for when you need different subcontractors to start. And you can also plan your money out better, right? How much cash am I going to need? When is the project going to be finished? So there's a lot of benefits to it, but I completely get the go, right? I don't want to give the impression that I'm some kind of like an OCD planner, because that's actually my default MO, is just, fuck it, let's just build it. Let's go. Here's some money, right? But that's dangerous that way. But sometimes you get so busy where you're like, let's roll. And especially now with COVID, I think we've all kind of relaxed, because it's been hard to get inspections done. It's been hard to get city inspectors out to job sites. I feel like it's almost relaxed everybody, because our expectations have sort of gone down. Like, I'm just happy things are still moving along, even though they're moving along slower. But
totally. One thing too in there that I want to illustrate is that if you're doing one flip at a time, or one project at a time, you can kind of do it on a yellow scratch pad, and you can write stuff out. But really, the Gantt charts and the systems are so critical when you're scaling. When you get 3 to 5 projects going at the same time, or like you said, you have, like with 8 projects, now you actually need a system to be able to track stuff. So I want to point that out to the listeners. A lot of people wonder, like, God, how does somebody go, even if they're doing cosmetic fixers, there's still a flow of, okay, we've got to demo the kitchens, demo the bathrooms. We need to upgrade the service panel. We need to, whatever it is, the flooring, the drywall, whatever the case may be. For somebody to scale, it's really critical. And I want to make note that you have to have systems in order to scale, where you're doing 50 or 60 flips or 70 flips a year. You cannot manage that. If you do, you're going to be very stressed dealing with it just off of a yellow pad, and you're going to make mistakes that cost you money. So
yeah, without question. Yeah, and one other thing that I'm adding primarily for myself, but I think it'll be useful to clients, is ability to click a button and generate draw requests. That's a huge pet peeve of mine, especially when we're doing multiple projects, when the bank makes me submit the draw request. And like, we're doing like a $2 million project right now, where if I'm building a duplex, I can get away with probably 3 or 4 draws. On this $2 million project, we have a draw every month almost. So I probably have 12 to 16 draws on that job. And it's just this huge time waste to keep filling out draw requests. So we're going to add something to the software where you're going to click a button, fill out what percentages each task is up to now, boom, and you generate draw requests for the lender. So I think that's going to be helpful to some people that kind of feel that pain, Should I answer Dimitri's question? It's a good question. So Dimitri, you asked if I hire GCs or am I my own GC? I started off being my own GC, but as my business has grown, I can't GC all those projects. So I've actually hired another GC. Right now, there's one GC that's overseeing most of my projects. The bigger, like $5 million project we're getting ready to start, it's going to be a different GC. But I have kind of a different approach to it. So I have a GC that's managing my duplexes right now, managing my 14 unit. But I work very closely with that GC on sourcing, subs, and materials. And I'm paying for all of the materials, and we have a flat management fee basically, right? So he is managing my stuff on a flat fee basis, not even a percent of cost in most of these projects. So that allows me to keep a better handle on costs, right? I have approval over every material order, every supplier, every subcontractor bid, and he is there to oversee the day-to-day, coordinate the subs, coordinate scheduling, oversee the work. And it's worked out kind of nice because right now, like I'm mostly working from home. I'm out at job sites once a week. We have a weekly meeting. We go walk our job sites, but I have a very tight handle on the numbers. Well, I think that's a little different. For most of the time you hire a GC, they give you a flat cost for the project, and they're marking up materials. There's a lot less control, I think, with a typical GC model. So
cool.
Love
Can we dive into the FU model, building a FU wall? For the viewers, I love the concept, and I think I remember just going to your Facebook group and seeing posts, as COVID kind of like started to launch, and thinking, it's such a great concept that I think everybody out there that's going to be listening to this now or in the future should really, work on building their FU wall. So could you kind of walk us through the concept behind that?
Sure. Well, I mean, the FU wall is not that complicated. It's just assets, right? I forget how that even originated. I think there was a webinar that I did for our email list where I first came up with that term, and it's one of the reasons why I primarily chase cash flow and not necessarily flips or transactional income. To most people, it's probably sexier to cash a $40,000-$50,000 check on the flip. Like, I've never gotten excited about it. What I'm excited about is that $500 a month that comes in from that rental house, because that's going to come into me for life. If you're adding really good quality assets to your portfolio and you have a really good management in place, so I have an in-house property management company, and we essentially self-manage all of our assets. We have really good procedures in place. I'm much more excited about the recurring income. Like, we all get into this business. We all start out getting into this business for the freedom, and then we all end up working way harder than when we had jobs, because we're either so deep in working inside our business, or we're so obsessed with making deals, chasing checks. Oftentimes we actually don't get that freedom, right? And you look back, you started 10 years ago and you're way busier now and way more stressed out than you started out as. To me, real estate is attractive because every deal I do, I'm building that brick to my FU wall, essentially, right? And it's a wall of cash flow and assets, right? Because it's not just cash flow, it's assets, it's equity. And I've been paying off a lot of my properties, so a big chunk of my portfolio is free and clear. You can't touch it. Bank can't touch it, right? You can't get to it. So that's and the term originated because I was doing a webinar and I was like, this is a brick that you put on your wall. You got medical bills, F you. You know, get fired from your job, F you. You have a financial emergency, you have a health emergency, your car breaks down, F you. Here's some money, right? COVID happens, I'm good, right? It's a way to live your life where you are secure. You're not like the masses that are $400 away from financial ruin or a paycheck away from being homeless. So to me, it's all about building that cash flow. Every property, every unit I add to my portfolio.
You're listening to the Investor Financing Podcast. We'll be right back after this break. Are you looking for funding? Are you getting frustrated trying to find a lender? Visit investorfinancingpodcast.com and click the Get Funding button. Complete the simple form and schedule a free phone consultation with one of our placement specialists. We have a proprietary directory of funding partners that can help you get the funding you need. It's fast and easy to explore the options available for your specific needs. Don't wait. Visit investorfinancingpodcast.com and get connected.
The safer, the bigger my wall is, the safer I and my family is in case anything happens, right? As long as you have proper entity structure in place, we have umbrella insurance policies, we have all sorts of, corporate structures. You have to structure your business correctly, but I like sleeping at night. I like not worrying about somebody firing me. I like not worrying about things happening because I'm protected. And if all I was doing was chasing transactional income, right? And me eating next month, depending on me getting more deals done, I think that's a different lifestyle.
Love it.
My portfolio is not that big. Like I don't want to seem like I'm some sort of huge investor because there are far bigger investors than me, right? In my market all over the US. But I can, even with my size portfolio, I can quit today. And we can live very comfortably. And I'm not saying this to brag, right? Again, it doesn't take many units. I don't have a huge portfolio, but it doesn't take many units to all of a sudden have that financial security that most people that work a regular job don't have. I just did a video, like I did an hour-long training for our list where I showed them how 4 duplexes replaces a $40,000 a year job.
Love it.
4 duplexes, right? Having 4 little duplexes is like going to work and getting 40 grand a year, except for you don't go to work. It doesn't take many units. It doesn't take many properties to have that security. And I see so many people just chase transactional income and not set aside money into assets. I think it's a big mistake.
I love it.
I get carried away talking about this stuff.
No, it's great. It's great because a lot of people don't. I mean, a lot of people only talk about transactional income, and Ferraris and Lamborghinis and money. And so I think it's a different perspective. I think too, when you say it doesn't take a lot, that's because if somebody's smart and they keep their expenses down, right? Their personal expenses, their personal spending, that's a big part of it. Would you agree?
Yeah. Yeah, of course. Live below your means. Live below your means. It doesn't mean that you should say no to yourself and not travel, not have experiences. I definitely will spend more money on experiences than I will on things. I drive a 5-year-old truck. It's not a terrible truck. It runs, but like, I don't have a Ferrari. What am I going to do with it? I definitely live below my means, and I think it's important. And
I love it.
I would rather be able to sleep at night. I would rather have cash flow and low overhead and low bills and not worry about what happens tomorrow. But also, I mean, again, like you've got to be doing things that you love. To me, development is something that I love. Like I love designing buildings from scratch. I'm very, hands-on with layouts and every detail of everything that we build. And to me, it's incredibly rewarding in and of itself, right? Like, I'm not just doing this for the money. Honestly, if you're just chasing money, real estate development is probably not what you should be doing, because it takes a lot of patience, a lot of time, right? It's a nice way to build long-term wealth, but it takes a good amount of patience. So to me, what I do is just fun and rewarding in general, right? I love the idea of creating something from scratch that wasn't there before, and that's going to impact how many people live for the next 100 years. Hopefully, if we do a good job building it, right? And it still stands in 100 years, that appeals to me.
Let me ask a question and kind of get back into some of the nitty gritty of doing a deal. Specifically, like with your entitlement process, how long does it typically take you to entitle a project? So you've got a piece of land or something that you're redeveloping. How long is your entitlement process? And then even maybe a step back before that, like what for you, when you're looking at a marketplace, I assume like you're very local, it's where you live.
Mm-hmm.
For the audience, in terms of choosing a marketplace, what are some key characteristics where for you looking at redeveloping and developing and building and doing the types of projects you do, what are some key characteristics of a marketplace that people should look for?
So in terms of entitlement, it depends, right? So am I building by right? If I'm building, and by right just means you have a piece of land and zoning allows you to build certain things on it. So maybe by zoning, you're allowed to build a duplex. If I'm building by right, we go to permit, and under normal circumstances, it'll take an architect 30 days to put together a good set of plans if it's not something that we're reusing, and then I go to permit. We can be permitted within 30 days and break ground, right? So if I'm building something uncomplicated by right, it's quick. I've had to do a lot of every duplex I'm building now. I've actually had to get what's called a special use permit. So they were all single family lots that I owned. I could have just built single family houses on them and sold them, but at that time I was looking at the market, and most of these houses would have been at a price point where I didn't feel comfortable building at that price point. Market was starting to kind of tank a little bit. So I decided it's much safer just to build duplexes and keep them in the rental portfolio. So I went and got special use permits for all of these single family lots to be able to put duplexes on them. And that process took us about 6 to 9 months, because it goes through planning department. You have to notify the neighbors. Is there neighborhood opposition? Is there not neighborhood opposition? Then it goes to city council. So it's a bit of a process. So that process took us about 6 to 9 months. I'm breaking ground on a bigger project in a couple of weeks, and that special use process took us a year and a half, because it was a much more visible project, a lot more neighborhood involvement. There was some opposition from the neighbors about height that we had to address, and so that process took 18 months. So it really varies. Obviously, if you can buy a piece of land and build something by right, that's the easiest thing you can do, right? Because then nobody can tell you anything, right? Neighbors have no input. You're allowed to build a 10-unit apartment building. You go and you build a 10-unit apartment building. So, I try to buy land for the most part where I don't have to rezone it. It just makes it goes a lot quicker. Now there's creative things you can do. You can put land under contract and say, okay, Mr. Seller, this closing is contingent on us getting rezoning, right? Or this closing is contingent on us getting a special use permit or our zoning variance. And until I have that in writing, we're not closing. Some sellers are okay with that, and that allows you to delay much further putting the money into the deal, right? So on bigger projects, you would do that. To address your question about picking out areas, I think you should be looking for areas in the path of progress. I'm really active in one neighborhood in my city, And I've got projects that are getting ready to break ground and in a couple of other areas, but most of my development has been in one neighborhood, and it was probably 25% foresight on my part and 75% luck that this neighborhood ended up taking off the way that it did. I would probably attribute most of it to luck. I mean, I saw something in it, but areas in the path of progress is where you're going to make the most money because it allows you to buy it at a better price point, and either through your own actions, development of a bunch of different investors like you, or just bigger developers than you, the market in general, the property values are going to rise faster than your city on average overall. Right, so you should be looking for areas that are, gentrification has become like a super dirty word, I think unjustifiably, but you should be looking for areas that are gentrifying essentially, right? Areas that are going up in value, areas where there's development happening. What I liked about my neighborhood in particular, where I'm really active, is there was a very healthy mix of rentals being developed, owner occupants moving in, and businesses moving in. And that creates for a very interesting ecosystem because we'll have tenants move into our building. In a year, they're leaving, which sucks because we're losing tenants, but they're actually buying one of our houses that we're building in the neighborhood. So they went from tenants to being owners in the same area. At the same time, we're developing retail spaces and putting really cool, attractive tenants into it, which are attracting renters to the neighborhood because now they want to live near a restaurant that's cool or a cafe that's cool. So it creates very, very sort of healthy ecosystem versus areas where it's all rentals, for example. Does that make sense?
Totally. Spot on. I love it.
And I think it's easier too, like in certain markets. If you look at like getting started in, like maybe a Midwestern market or like Virginia, for example, back, the price points are just way easier to like get started, it seems like. And sometimes if you're looking at an entry level infill lot in like Oakland, California, it's just so expensive, right? It's like it overwhelms people where, like if you look at back when you had the foresight to say, okay, this area is gentrifying, I can pick up lots in here for 10 grand, right?
Yeah.
So for me, living on the West Coast, I see more opportunity going east, but the disadvantages are that I'm not there, right? And so that's a huge disadvantage where I can't go walk these properties regularly.
Yeah, it's I think I'm fortunate in the fact that I happen to live in an area where there's been a lot of opportunity. I think doing things remotely for me would be difficult given how much of a control freak I am, right? If you have good partners, if you have good partners on the ground, people that you trust, obviously that's a different story. But yeah, I mean, I operate in a fairly affordable area. Our median price point is in the 250s, right? So that's our median price point. So I mean, it's very affordable. And so the barriers to entry to get started are definitely lower here than they are on the west, in certain parts of the West Coast, where when I was living in New York, when I still had my corporate job, I looked for real estate in New York. Went to Brooklyn, went to Queens, all over northern New Jersey. I mean, I spent 12 months looking for opportunities to get involved, and there was nothing, just nothing that made sense to buy. And at that time, all the investors from New York that were smart were going to Philly, because you could drive to Philly and it's about an hour, and you could buy houses for 60 to 80, $100, $100 grand, I guess. So all of those investors were going down to Philly because that's where the opportunity was, and that's where the barriers to entry were lower. So you got to go where ultimately, if you want to do deals, you can't force deals. You've got to go to where the numbers make sense.
Yeah.
Smart. Makes perfect sense.
Yeah.
Very true. Very true.
Sometimes I get lucky and say smart things. It's not a thing that happens a lot. So.
Oh yeah, no,
that's you're a smart guy coming from Wall Street and bond trading and Bear Stearns.
Nah, they just need another Russian. They were short on Russian immigrants. They hired me.
When did your family come to the United States?
Back in '92. So I was 12, almost 12.
What's that now? What's the math? How old are you now?
39.
39. Okay.
Almost 40.
Yeah, I was trying to tell Ty. I go, yeah, I think he's a young guy. He's a couple years younger than me. I just look really young, so it's hard to get. I can't.
It's all about the energy you exude. That's what matters. So
that is what matters. Amen.
Yeah.
But I need to build the FU wall because that really resonates with me. And I've used Rehab Valuator like when I'm buying my stuff in Indiana. It's just because I need things really easy and it's simple to put a presentation together because I'm not one that likes to spend a lot of time on things, and that's kind of my downfall. But your software is super easy to use. I love it, and
thank you.
And it's it's easy because you could like send a link or send a PDF to somebody who wants to lend you money. So I really enjoy that. Ty, any questions that you're thinking right now?
Yeah, I did pull up the website and for Rehab Valuator, and this wasn't intended at all to be a pitch for it, but it's again, when I see things of high quality, I didn't realize you had all the tools, all the like the Gantt charts and all the things you've talked about. And I love too that, I went to the site. I didn't realize you have a free version or a light version.
Mm-hmm.
Is that right?
Yeah.
Yeah. And we haven't rolled out the Gantt chart. I want to be clear. That's coming out in the next release. But yeah, there is a light version that basically lets you do all the analysis. Right.
Cool.
And then the marketing part, the detailed project management, that's in the premium version. But yeah, there's a fully functional free version that lets you do all the number crunching basically, and you can use it for life.
See, to me too, when I see somebody having a free version, that tells me a couple of things. A free version and then a paid version is that it's so kick-ass, is my guess, is that people that are using the free version are going to want to upgrade to the paid version. Is that pretty accurate?
That's the goal. Not everybody upgrades. For some people, the free version is enough, and that's fine. We're happy to support them. I mean, we don't distinguish between people when they contact our support. We don't go and look up their account and say, oh, if you're a free user, we're putting you at the bottom of the queue. We provide free support for the free version, and ton of training, ton of content, ton of education. And for some people, the free version is enough, and some people who see they upgrade, and we try to even price the premium version relatively low and make it affordable for people. But yeah, I mean, look, we're confident in the product, and I reinvest quite a bit of money into the platform every year. I mean, I probably reinvest 6 figures every year into additional development and improving the platform, and it's cool. We've probably given out, I mean, easily 100,000 free versions since they started. Realistically, probably more. I mean, if I went back and counted, I mean, we probably had way more than that sign up. So it's cool. We've been able to help a lot of people. I mean, and there's an interesting synergy, and I'm very open about it, right? But I have this business, and we provide a great product, and it makes me good money. Everything I earn in my software business, I never spend it. It goes right into the FE wallet. It goes all into the assets. So that's one of the cool things I've been able to create for myself is I have an operating business that generates the cash, and that cash gets reinvested into the asset base, and it just keeps going. And it's cool. It allows me not to have to go out and raise money. Ultimately, if I want to do the size of projects that I sort of dream of doing, right, I'm probably going to have to bring on outside investors eventually. But so far, I'm able to take profits from one business and just reinvest it into my development projects and keep building the asset base. And it's a cool combination. But then what I learned in the real estate business, I then put back into the software, into the education and improving the software. So it's very synergistic. I'm going to use a corporate word here, right? Synergetic. I don't know. Synergistic. Yeah. Right. So it's nice. It allows me. I'm very big on freedom and independence. And so it allows me not to have to depend on outside money. If that makes sense. I can develop projects with my own money, and I'm probably kind of crazy because I prefer to develop projects with my own money rather than bring in outside investors. I mean, the traditional thinking in real estate is you should never use your own money and put your own money at risk, and I think differently about it.
You know what?
I prefer to use my own money and not have to answer to anybody.
I agree, and then I think too, it's the highest level of accountability, right? When you're accountable to yourself, and I think, I totally see that, and I can appreciate that, and it gives you control too. So I mean,
yeah,
I could see it for a lot of reasons. So that's strong. I love it. Thank you. I've learned a lot today. I mean, I literally have a whole page and a half of notes. And
okay.
Got a lot no, for real. Like I got a lot out. I was kind of quiet the first 20 minutes, 25 minutes, but I got a tremendous lot of value out of this, and then even a lot of insights on things I'm doing where I can make some adjustments. So I really appreciate your time. And Beau, you had a question. I'm sorry, I interrupted.
Oh yeah. No. I was just gonna say, what's interesting about Daniel is that he's kind of an introvert, right? But if you watch him and study him from like a business perspective, he's like an extremely good marketer too, which is interesting because I'm more of outro, but if you watch him and how he's just, if his mind is he's a really smart person, and not only in real estate but in marketing. And that's kind of more interesting to me, like when I study people's how they have their businesses set up, right? That's more important to me because that's what I want to learn. The real estate to me is, I don't like the design stuff, but the business, the setup and the structure of all this is great. And I love being in your rehab evaluator, your inner circle group as well. You guys can find them on Facebook. I'm gonna post all your links too.
Cool.
So people can check out. He's got a wholesaling course for $18 that, I don't typically promote people, except I only promote people that I believe in their products and I use their products. That's the only people I ever promote. You, Investor Carrot, Trevor, because Trevor gets me a bunch of leads and your software is super easy to use and everything.
Trevor's awesome.
Yeah.
It's great.
I've been trying to get him on the show and he keeps on, I don't know. He's been running a lot lately. I've been watching him on Facebook. He's like doing a marathon or something.
I bust Trevor's balls a lot because he's a buddy. He was at my wedding and like we're buddies, but like I'll text him and he'll reply to me in like 3 days, and I'm like, dude, can't be that busy. He's got an assistant. He runs it. The Carrot team is like huge. I think they have like 30 people now. It's like my nightmare of a business, having 30 employees, but he loves it. He thrives on. They do a great job. Like they do a great job in Carrot. They build, they're the best at what they do. It's a phenomenal company.
Last question: were you I kind of think that you were the first person to coin the word BRRRR. Is that? Do you like who was the person? You were like one of the original BRRRR people, and then all these people. I have some other friends that wrote a book on BRRRR, but I'm like, you guys kind of stole that idea.
I don't know. I don't think it was me. Most people credit Bigger Pockets with it, but no, I was teaching BRRRR before Bigger Pockets ever did. But I don't think I coined that phrase.
Yeah.
I think I was teaching it without calling it that.
Yeah.
I don't think I coined it, but it also wasn't Bigger Pockets, I don't think.
Yeah, I don't know. Because I always recall that I learned that strategy hearing you. So I just wondering, because I like Brandon and David over at Bigger Pockets, but I just
no, I mean I'm not talking shit about those guys, but I was recording videos in BRRRR back in like 2010.
Yeah.
Way before they were teaching it. So
yeah, I know. David just started investing in 2010. So but anyways, I love giving them shit. That's why I was saying. Well, thank you so much. We're almost at an hour already. We could probably do another one and do like I'd love to do one, Ty, because if you actually see the projects that he's creating and you like the renderings and some of the projects you've built, I mean, his construction is so high quality, and it's more of like the old, kind of the old style architecture, which we don't really see here that much, like on the West Coast. But you'd really get a kick out of seeing that, Ty.
Yeah, I'd love. Yeah, definitely. Let's get you back, and I'm literally going to sign up for the rehab valuator. I'm excited because I think it's a great tool. So I'm going to get in there and play with it. It's something kind of what I don't really do a lot of and don't spend the time. So it's somewhere where I can see as an area of improvement. So thank you for your tool. And I'm going to get on the free version and of course upgrade once I kind of figure it out and feel comfortable. So cool. Man, that's exciting. And the Gantt charts too. When are you releasing obviously you're always doing upgrades, and when are you releasing the Gantt charts?
I'm hoping late summer. I'm in the middle of testing it right now. Right, so I'm in the middle of beta testing it, and we still have a bunch of improvements to make. I don't like to release things until they're perfect. So probably later this summer.
I love it.
Is when we'll release it. Yeah,
I love it. I think this is a great tool for scaling. I mean, obviously, I want to get in there and use it myself, but it's just everything that you've described and what you do. I don't think people really think it through, but that's how somebody goes from doing a deal now and then in terms of scaling to consistently doing deals every month. Even just the small cosmetic rehabber to more intricate and development of what you're doing. So, man, thank you for coming on, and it was a pleasure. I learned a lot from you. Thank you so much.
Yeah, I appreciate you guys having me on, and I'm pretty sure I got more compliments from the two of you than I get from my own mother. So you guys are far too nice and far too kind. Or maybe my mom hates you. I'm not sure which one.
We're planning a mastermind when COVID-19 breaks, where it's going to be amazing event. We haven't really figured it out, finalized, but it's going to be all of our friends, and we're going to invite you because we know when you go to Vegas, you like to spend money. So we're trying to butter you up a little bit.
Oh no, don't make me go. Don't make me go to Vegas. Last time I was in Vegas, and we can end the call with that. Last time I was in Vegas, we got evicted from the penthouse suite at the Cosmo, like escorted out by security. So, and that's all I'll say about that.
Nice. We'll get the penthouse in Beau's name. We'll get it in his name.
No.
Yeah, I'm not putting my name down anymore, man. Not, and go to Vegas with me at your own risk. So.
I'm a married man now. I can't do the things I used to do.
Oh, sure you can. You bring your wife. Come on, it'll be a big party.
And both of you guys have new babies too, right? So you're
yeah. No more of that stuff for sure. So.
Love it.
All right.
Great call, guys.
All right, I'm going to take us out with our outro video, and we'll see you on the next call. Thanks, everybody.
Thanks for listening to the Investor Financing Podcast. For show notes and useful resources, please visit investorfinancingpodcast.com. For questions or comments, email info@investorfinancingpodcast.com. If you enjoy our show, please share it with your network. Until next time.